Hello traders, welcome to TRADEPRO Academy's YouTube channel. I hope everyone's doing well. And in today's video, what we're going to be talking about is yet another futures trading video. Now, we're going to be talking about the market structure in futures. Now, we've talked about futures volume profile, we talked about futures DOMs and all of that, but market structure is a very basic form of understanding how to actually read the market. Now, market structure in futures is a little different from your general market structure, right? There's a better way to look at it, and that's exactly what we're going to be explaining today in this video. Market structure generally is very closely related to price action, as you may know. However, in the futures market, this is a very, very liquid market, and order flow in a centralized exchange is very available, very readily available for you. So why don't we take advantage of that? When we talk about futures market price and market action, realistically, what we're looking at in terms of the structure is distributions. We're looking at compressions and expansions. We're looking at stop hunts, and we're looking at trends. So I'm going to explain all of that to you in this video, how you can understand the market structure of the futures market with order flow in mind when we talk about stops, compressions, expansions, and distributions. So if you're super excited about this video, let's get ready for it. I want to just dump into this intro and then jump right into this futures video. So let's go through this intro, and then I'm going to explain exactly what we're going to be talking about throughout the topics. So in today's video, I'm going to be talking about how markets trend, how markets move. We're going to be talking about market compression and expansions. We're going to be talking about general market trends. We're also going to be talking about stop losses and how those relate into the overall market. We're going to be talking about cascading stops. We're going to be talking about swing highs and lows, and combining all of that, we're going to understand how the futures market actually moves and how to actually discern the market structure. So now that we're behind the screens here, we're going to be looking at TradingView and the S&P 500 futures. This is going to be the main focus of this presentation, and we're going to go through some concepts, right? We're going to go through the concepts that we talked about. We're going to be talking about how the markets move in terms of compressions and expansions. We're going to be talking about the general market structure and trends. We're going to be talking about daily ranges. We're also going to be talking about swing highs and lows, and also cascading stops. So in total, we got 5 topics here to discuss the understanding of the market structure in the futures market based on the S&P. So the first concept that we have to understand is how the markets move, right? Before we talk about everything, we have to understand that markets move in fractals. Now, when we talk about fractals, we can consider that any point, right, any piece that you take of the market can be identified with a trend move. Now, any point, any individual point might agree or disagree with the overall trend. If we take a look at the overall trend of the market, we can see over the past like 15, 20 odd months or so, we can see that the trend has been somewhat to the downside, right? But if we take any piece of this move, right, it can agree or disagree with that overall statement. So markets are very, very fractal, and it depends on what kind of time frame that you're looking at to actually trade these markets. So if you look at a daily chart on the S&P, as exactly what we're doing right now, you might see a pretty sharp downtrend. Now, if you zoom in over the last few months, right, you can see that we've rebounded to the upside. If you zoom further in, right, you can see that there are different trends on a 4-hour, 1 hour, 15-minute, 5-minute, whatever the case may be. But when you zoom out, you're going to see the grand scheme of things, which can really pinpoint an overall trend. So you can be focused on the immediate structure, you can be focused on the larger structure, but as a day trader, you want to be focused on something that's more concrete and more immediate, right? So for example, we want to be focused on the last few trends in the overall market. If we take a look at the last few trends of the overall market, you can see it's a very strong uptrend here. Now, this very strong uptrend, obviously, you can look at the volume profile. It's going to be one portion of this, but volume profile videos, you can check those out on our YouTube channel as well. But if we take a piece of this action right now, we're in a very strong uptrend realistically. Yes, the trend is overall down, but we're in a pretty strong uptrend right now, and we have to take this into consideration as day traders. Now, the first concept I want to introduce to you guys is going to be compressions and expansions. Now, to understand these concepts, right, we have to understand what general compressions are versus expansion. So a compression is realistically a range period. Depending on the time frame that you look at, you'll see on a larger scale or a smaller scale, you see a compressive period where the market rotates sideways. This is typically a balanced portion of the market, and you can see that in the distribution where the volume profile is, where the volume profile amasses these thick distributions that we've talked about time and time again in our volume profile videos. You can see one is sticking out very, very easily right here where I've just outlined it. This is a compressive period which we're in right now. We've came into an older compressive period where realistically markets are going to range. This is an area where no new information is introduced into the market, which means that supply and demand, right? They're fighting. There's no new additional news from a macro perspective, from an external perspective, from a supply and demand perspective that would cause a sharp move to either side. The sharper move would push us into this area where the next large volume block is, or to the downside where this next large volume is, where price is expected to compress yet again before the external move. But you can't really necessarily see this on a daily chart. You'll have to zoom in on something that maybe is an hourly chart, for example, where you can see more of the compressive periods, right? You can see most recently we've ranged, right? We've compressed, we've expanded. You have a compression here, you have an ongoing compression here, you've had a compression here before the expansion, right? You have this compression before this expansion, so on and so forth. The expansionary period is the period that we want to be interested in because that's where the majority of the gains are going to be made. In a compressive period, the point is find the extremes of the compressive period and try not to get slaughtered and trade those extremes. In an expansionary period, you catch onto the expansion, and that is what rides you to the gains. The expansionary period, right? If you have a compressionary period like this, for example, the expansionary period that explodes out of it here, let's take a look at this one. This one's very, very compressive. If you have a compressive period right here and you have an expansionary period, the compressive period, if you play the edges, that's great, right? If you get caught in the chop in the middle, it's very bad. The point here is not to lose your head. The expansionary period is where new news is introduced, right? Whether demand is greater than supply or supply is greater than demand, you'll have that move. Or if you have a new introduction of information that's external, right? Whether it's macro level, whether it's something else, this is what the expansion is made out of, and you want to identify those moves. So the compressive periods are very usually identified by a very solidified volume block that happens on the volume profile, which is a distribution. When you go from this is the balanced area into an imbalanced area, that is your expansion where the volume is super thin that escapes the balance and allows this price to move, and it allows it to move very well. So that's one of the main concepts you have to understand. Where are the compressive periods? Right now, we found ourselves in a compressive period, right? And we want to understand how are we going to escape out of this compressive period. So we understand that the lows of this compressive period are in and around 4105, while the tops, right, are getting established around 4185 to say, right, maybe even 90. So those are going to be the compressive tops and the compressive bottoms. And in between that range, you have about 80, 90 points that allows you to trade this range from the extremes naturally. Now, when you get an extension, that extension is going to be much, much more profitable. That might charge back into this 40-30 region, right? Which is nearly 70 points below, or back above towards that 4,300, which again is about 100, 115 points above that area. So understand these compressive and expansionary periods is really, really going to start your development of the overall market structure in the scheme of the futures market. There's also the case of general market trends, right? If we focus on day trading, we want to consider some smaller market trends, which could be visualized honestly starting from the daily and moving down from a daily to an hourly to a 15-minute to a 5-minute, understanding whether the market is rising or dropping, right? When you're dropping down in these time frames. Now, this allows us to understand where the market's max pain is. So if we look at this realistically, and we're in a uptrend right now, we understand that any move to the upswing, right, is going to be on trend. any move that collides through some of these lows is going to provide us with some max pain. So what this would generally mean, right? If we're in a bullish trend, higher highs, higher lows, higher highs, higher lows. That's a general market structure of this, right? You got these higher lows and you've got somewhat higher highs until this high is broken, right? And understanding that bullish markets, right, they continue as long as higher highs print and as long as impulse lows print. An impulse low means the start of the area that creates a new high. So as long as these impulses hold and we get higher highs, this trend should continue. Once the higher highs stop and we break the impulse that actually started this move, then you're probably going to see a little more downshift, right? So it's very important to understand how this structure of a trend works. It's the same case for a bear trend, right? In a bear trend, if we take a look at some of these examples right now, we've had a decent bear recently into a compressive period. Zoom out a little here. But overall, right, we have this little minuscule bear trend where we would print, right? We would print, right, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, until at one point we created this compression period that actually broke out of that trend. So until something like this happens, right, which we're starting right now into a compressive period of this upside swing, the trend will not change realistically. So we have to start breaking through these distributions like we've talked about before. You can see the start of the distribution. We start breaking under this, we can start looking for the trend to actually shift shape. So understanding those trends is another pivotal aspect to understand the overall market structure, but it develops further than that because I talked about liquidity, I talked about the availability of information. So we have to understand what swing highs and swing lows mean to the market. We have to understand what cascading stops lead into the market, right? Those are two very, very important concepts to understanding how this market generally moves. Now, we can also talk about daily ranges, but first we have to understand what swing highs and swing lows mean to us. So if we take a look at the S&P 500 here and we look at the daily chart, we can map out on this most recent trend, right? We can map out on any trend realistically. So we'll talk about any trend here. So we'll take a look at this trend overall, and then this trend, and then not, well, yeah, this trend is fine. And then this trend. So we'll take a look at these trends. So you can see you have these swing highs and swing lows, right? You have a high here, you have a lower high, a lower low, a lower low, a lower high, right? A lower high, a lower low, a lower high, and then a lower low technically here. And then all of a sudden the structure flips, right? So what this introduces into these swing highs and swing lows is areas that large traders in a trend will hide their stops, right? So when we're in a downtrend, every lower high that we make, right, is an area where not only do traders have to get super short to make this extended move, but these large orders will place their stops above these regions. So what that tells us is when stops are placed like this, right? You have a stop here, someone sold aggressively, someone sold aggressively. You have a stop here, you have a stop here, right? And then you get this lower low, you might have a stop here. Once that stop here is hit, you're expecting a very strong reversal because of all of these stops that had happened, right? Let's take a look at this example as well. This trend reverses, someone bought here aggressively. There's a very strong wick. You have a higher high, right? A higher low, a higher high, a higher low. So stops, a higher high, right? Higher low, stops. All of a sudden, this creates an impulse because the same low in this range is being tagged, but higher highs are being formed. But you have a very strong low here that has amassed a lot of stops to attempt this upside move. The same thing might be occurring on this rotationary aspect here, right? Again, you have another trend that shapes up. They run the stops. You have a massive range that exposed to the upside. Stops are here, stops are here, stops are here, now stops are here. Can we make a new high? What this does in the trend is creates what we call cascading stops. So if we draw a trend line, right, just to understand, just to visualize this, right? It doesn't have to be a perfect trend line. We just want to visualize this. We draw one here. We're going to draw another one here like this, right? We're going to draw another one here like this. We're going to start visualizing things. What does this mean to us? So in each of these trends, what cascading stops are? You have an area right here. You have this big of a stop, right? These are just the initial sellers that come in. They have this big of a stop. They create a new low. They pull up, they create yet a new low. They have more stops here, but these stops add to these stops, which creates a larger stop block. You push up, right? It doesn't hit the stop block. You create a new low. There are new sellers here, but these guys add to it, and there is yet another larger stop block. So you might understand what I'm going through here. Every time the stop block increases, every time you get the opportunity to add to shorts and move your stops lower, the stop block gets bigger and bigger. And at a certain point, this stop block gets hit, and that is what runs the stop move on the large orders, right? It happens here as well. These guys pick this up really well. They have some stops here that look like this. They move up, right? They pull down, they move up again. This stop block gets bigger, right? They move up, they push up, this stop block gets even bigger. They push up again, this stop block gets even bigger. They push up again, it gets even bigger. And all of a sudden, under what was that area? I believe it was like 3, 9, 10 or so. All of a sudden, once that area is hit, massive stops are ran on this, and you're going to get an extended move. In this case, drops about 100 points, right? So these are the cascading stops, which is what's accumulating right now. They've got a decent size here. They've got a larger size here. They've got an even larger size here. And right here, they have a very big size. So once we start breaking back under 40.90, a lot of these stops are going to get eaten up, and we're going to move into, right, distribution blocks that are to the downside realistically. So this distribution block awaits us, right? We have another distribution block here, so on and so forth. So the first target is going to be somewhere back into 3960, right? Once we break that 4090. So it's over 100 points of a potential move if we can run the stops through this area. So it's very important to understand where these cascading stops come from and what these cascading stops actually mean to us once we understand the trend, which does helps us in the market structure. When we start thinking about what the orders are and what the order flow, it really helps us understand what the potential moves of this market are. So even with the distributions, as long as we stay within this distribution, realistically, we're going to be still looking for that upside. But there's going to be a point in time where this trend reverses, and we have to understand where that trend's going to reverse and what the potential of that move is. Now, the final piece of information I do want to talk about is going to be daily ranges. Now, daily ranges, when we start to understand market structure, are going to come from inside days. When we start understanding inside days, an inside day is a day, right? The original day. So let's say this was yesterday, that has a high and a low right here. Now, today's session into the close, the high and the low are within yesterday's high and low, which creates what an inside day is. Now, these range days, right? As a day trader, you're going to want to understand where the highs and lows of that inside day are to see if there's going to be an extension from the compression that we saw throughout that day. As a day trader, this is an important fact that you need to know. So if we start looking for inside days here, I'm not finding very many. So this constitutes as an inside day right here, this green candle. You can see it's within this big red candle here, and we've marked the highs and the lows of it. What we're going to do here is when you escape that inside day on the following day, realistically, you're going to be looking for an extension, right, to the upside or the downside, whether that where it escapes. And this is a very useful tool for day traders. So why don't we just dive into that? Let's see what day is December 27th. So you can see on this chart that we actually open up, we gap higher here. And honestly, any pullback that happens like this on an inside day is redeemable for that extended move that we want to see. You can look at inside days. They're a little harder to find on the S&P 500 futures, but look at those inside days and see how we break the tops and how we break the bottom of that compressive range to get that expansion, which is going to lead into that next imbalanced move, which is very directional. Now, if we get back within that inside day, it's the same thing. You want to look for that move back into balance. So we've talked a lot about different things today in terms of market structure for futures trading. And I hope I gave you a different perspective than just general price action, because there's a lot more to it. With the opportunity to look at order flow on a very easy basis and look at how the markets generally move, considering stops, considering compression and expansions, and considering the volume profile, in which that you can find a lot of videos on our website and also on our YouTube. Go check those out. Give you a better perspective in the general market structure for the futures market. This is based on the S&P, but you can apply this to pretty much any different market. Now, if you enjoyed this video, I want you guys to smash that like button, hit that subscribe button, and drop a comment down below. What next do you want to see at a TRADEPRO Academy? And we will provide. So thank you for being with us, and I'll see you guys next time.